The Blacksmiths Capital Research website, newsletter, and related social media posts, content, and podcasts are provided for general informational purposes only and do not constitute accounting, legal, tax, or other professional advice. Visitors should not act upon the content or information found here without first seeking appropriate advice from an accountant, financial planner, lawyer, or other professional.
All right, everyone. So today we're going to go over moving average convergence divergence. What is moving average convergence divergence? So this aspect, because when it comes down to that part of things, you just got to know that momentum can always be an upward or downwards. All right, so let's just look at this AMD chart right here real quick so we can just get a little bit of a sense of what I mean by this. All right, so moving average convergence divergence, I'm just going to add this as an indicator to my chart real quick so we can get a chance to look at it. So commonly used, it's another thing you'll see here, right? A lot of people use this indicator. I use it a lot as well. So you got the numbers on here: a fast MA period of 12, slow MA period of 26, signal period of 9. That fast MA period, so the moving average you're working with is the exponential moving average. The slow, 26-day exponential moving average. The signal, 9-day exponential moving average. I mean, as well, when I say day, that depends on the interval type you're using. Because if you're doing an interval of 1 minute, then it'd be 12-minute exponential moving average, 26-minute exponential moving average, 9-minute exponential moving average, right? And if you're looking at a weekly chart, 12-week exponential moving average, 26-week exponential moving average, 9-week exponential moving average for signal. So MACD. So the line of MACD, so the way it's calculated is that you're taking the value of the 12-day exponential moving average, because we're going to look at the one-day interval in this case, taking the value of the 12-day exponential moving average and subtracting the 26-day exponential moving average. That gives you your MACD line. Your signal line is going to be your 9-day exponential moving average. Increasing bar, going to keep that in green. Decreasing bar, going to keep that in red. These increasing and decreasing bars are histograms. So I'm just going to show you what that looks like real quick. All right, so I'm going to change this chart up, move some of these things around so you can view this a little better down here. So we see our MACD down here at the moment. Just going to zoom in slightly. So I'm looking at the AMD chart, Advanced Micro Devices. So this is a company just really involved in gaming space, computer processors, a bunch of other computer components. It's a stock I'm long on. You know, again, this podcast for exponential purposes. I mean, not exponential purposes. Wow. Keep saying that word so much, just messing up. All right. Not for exponential purposes, but for educational purposes. This podcast is for educational purposes. So I'm going to keep this in here and not take that out, just so you know that I make mistakes sometimes when I record these, and it's not important to get it perfect, just as long as I correct myself. All right, end of the day, looking at the AMD chart from March 19th of this year to the present. All right, on this chart here, so we see that MACD line here in purple, the signal line here in orange. All right, so that orange line is the 9-day exponential moving average. That purple line is that 12-day exponential moving average subtracted by that 26-day exponential moving average. And you see in parentheses here, we got that 12, 26, 9, right? All right, so the increasing bars that were in green, that's right here, the histograms. The decreasing bars in red, those red histograms. If the histogram bars are red, that means that the distance between your signal line and your MACD line is getting smaller, which is saying the same thing as momentum in whichever direction the lines are moving is decreasing. If it's green, that means that momentum in whichever way the lines are moving is increasing. And it's either going to be above or below 0 for the histogram bars, and then as well for the MACD lines, above and below 0. If your lines are below 0, that means that you have bearish or downward momentum. If the lines are above zero, you have bullish or upward momentum. So let's see here as well. I'm just going to visualize moving averages of the 9-day, the 12-day exponential moving average, and then I'm also going to add the moving average for the 26-day. So you can kind of just see them here on this chart, get a better idea of what I'm talking about here. So you see on here that 9-day in purple, how that's, a little below that 12. And then you also see that 26 right here. So you see the distance between that 12 and 26 growing right here. And then you see right here as well, that 9-day. But then do you notice how that corresponds to the actual chart right here on those days, those green histogram bar lines? Kind of see how that 26-day is kind of flattening as it goes downward in rate. And then that blue line at the 12-day, how that's kind of getting further away from it. So we have that increasing distance between the 12 and 26. So that MACD is growing. So that green histogram bar. All right. So I have RSI on here as well because momentum indicator, like MACD especially, that's a lagging indicator. And I'm going to change my RSI to 14. So lagging indicator, meaning that when you're doing momentum trades and using an indicator like MACD, you're going to get the signal a little after the trend really gets going. So think of momentum indicators in trades like snowball coming downhill. If you're at the bottom of the hill, it could be going fast a little sooner than you realize, just because of the fact that you're downhill, so you can't see it properly, right? So that's like gaining momentum. And as it comes downhill, gains kinetic energy, gets faster, faster, faster. And then as it flattens out and gets on flat ground, that momentum starts to slow down over time, right? As it loses kinetic energy. And that's the same thing as like kind of bearish momentum. So you just see here how this red bar up here, we start declining here from April 28th all the way to about May 4th before settling out a bit. Look what happens on your MACD lines. That purple line, that 1226, that MACD line, how it starts decreasing and then moves below zero. And then your signal line of the 9, how that eventually moves below zero a little after. So you see they cross right here, right before you get your MACD. Your MACD lines are crossing right before you kind of just settle out on that trough on May 4th. So you come below, and that's that bearish momentum coming. You see the lines moving down. So this would be a time where you would have seen, all right, well, my histogram right here going from green to red. Oh, momentum slowing. So you can see RSI too, and how that's a little high. And you see how that's moving down. I see my moving averages up here, how those are moving. Okay, that means I would want to sell up here. And then over here on May 14th, how the lines are moving and how the histogram goes from red to green. Oh, momentum's picking up. Oh, my lines are moving closer together. My MACD line crosses above my signal line to that 9-day. Oh, that's looking like a time to buy. So you can either buy when you see the histogram lines change and stay like that for a few days, and then also watch the RSI as well to make sure that that's moving from the oversold, which is the bottom end of the range, as well, just to make sure, because you don't want to go immediately off the indicator. You want to make sure that you're really paying attention so that you don't fire your trigger to buy or sell too quickly. So I usually like to wait a day or two, or just like a few spots on the actual moves, depending on just the interval I'm using. All right, so I see here when they cross each other right here, you could have waited till then as well. So I see they're crossing and moving up. Okay, so it looks like this is going to be some long-term upward momentum. So right in this range here between May 14th and May 21st here on AMD would have been a good time to buy. So, and you can see on the candlesticks as well how they're moving up. And you can see how AMD still to this day, still moving up, still positive. And then finally here on June 2nd, what do we get? MACD line moves positive, and it's diverging even more from that signal line to that 9-day. My histogram, my green bars are going up, getting bigger. Oh, whoa, 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 whoa. We got a lot of bullish momentum. So looking like AMD's in that bullish phase. So yeah, again, that around that range of about May 13th to 20th would have looked like a really good time to buy AMD stock. And then this is a good way to do swing trades. These are trades that you keep anywhere from a few days to a few months, or these are good ways to find entry points for long term as well. So that's just a little short primer on that. Technical indicator MACD, you can combine it with things like RSI and your moving averages as well. Just another great toolkit to have in your toolbox. And kept Technical Tuesday short and sweet today, because next time I want to get into looking at support lines and trend lines, and then really looking at candlestick formations and candlestick types to really get you a little better at reading charts, and also get you better at looking at ranges that stocks will trade within. And that has a lot to do with those support and resistance lines to help you find breakouts, to help you find points where stocks can really move up or really move down. So thank you for tuning in to Technical Tuesdays, and stay tuned for the newsletters and also for Timeout Thursdays and then Stocks and Cereal. Thank you, everyone.
The Blacksmiths Capital Research website, newsletter, and related social media posts, content, and podcasts are provided for general informational purposes only and do not constitute accounting, legal, tax, or other professional advice. Visitors should not act upon the content or information found here without first seeking appropriate advice from an accountant, financial planner, lawyer, or other professional.